Hello everyone, welcome back to the Technominimalist channel. This is the third episode of my journey to financial freedom, and in this episode I'll do a more in-depth review on one of the stocks, talk about why I bought it, why I'm still holding it, and just explain more to you guys about this company. Before I get into the stock review, I just wanted to take a minute to say thanks for everyone who went over to our Twitter and Instagram. I think around the time I made the last video, which was 2 weeks ago, we were at around 50 followers, so it's been growing nicely and it's great to see we're starting to increase our fan base. With that being said, if you haven't yet checked out the Twitter or Instagram, I'll link it down below. If you want to give us a follow there, we're very active, often tweeting out news and events that happen in the stock market and the companies that we follow. So let's get right into the video. As always, we will start off the video by taking a look at the portfolio. This portfolio was opened during the week of October 15th, so it's been around 2.5 months now. And for now, we're still using the website ShareSite here. I'm still working on an Excel sheet to track the portfolio better and provide a better understanding of the performance for this portfolio. I went through and did a rough calculation for my contributions to this, and it totaled approximately $2,400. And then currently we're sitting at $3,600. ShareSite does calculate it a bit differently because they take into account the currency gains, which my broker does not. Now, as ShareSite shows us here, we can see that Sol has been the real breadwinner for this portfolio, providing a return of just under $1,300. VVPR has been kind of flat recently. It's been floating around the $9, $8 mark. And then Kraken Robotics, the very small position that I took, has been flat as well. Now we will get into the stock review for Sol here, as you can tell by all the tabs that are open. I talked about Sol in the last episode. If we look at the 1 month chart, the last episode was recorded around this range where Sol had pulled back from around $8 to the $5 range. I had made a comment in the previous episode saying I didn't expect Sol to stay at these levels for long because it had appeared to pull back when positive news was released about the sale of some of its solar projects. Since the last video, the past 2 weeks have been great for Sol as the stock has gone up all the way to 1320, which is the new 52-week high, and it is over double the price from when I had said in the last video that I didn't expect Sol to stay around the $5 range. It appears as every time I check my phone and get a notification from Yahoo Finance, the app is telling me that Sol has reached a new 52-week high. I've had about 3 days where they've sent me those notifications. This has been a great 2.5 month investment for me, and I plan to continue to hold Sol for the immediate future. And in this video, I'll go in depth into why I'm choosing to hold Sol as a long position. Sol, or ReneSola, is a company that develops and operates solar projects throughout the globe. The company has a couple business segments. So first of all, they develop solar projects, which has two different models to it. The most popular being the build transfer model, where the company will build the solar project and sell it to be delivered to the grid. In this business segment, they will sell the actual solar panels to another company. The independent power producer business is where the company will either construct or purchase their own solar project. The company also has other business segments which include construction, contracting, and procurement of solar projects. Sol has projects throughout the globe as demonstrated in this map, mainly in the United States, China, and Poland, but they also have operations throughout Europe and in Canada as well. The company released its third quarter 2020 financial results around December 1st, and as you can see in the chart, the stock fell due to a significant decline in revenues. However, a few weeks prior to the earnings release, Sol had released an operational update to investors, and we got to see that this revenue decrease was mostly due to the timing of sales for this quarter. So at this time, I had a bit of cash and I had seen the decline. I knew already that the revenues were going to decrease, but we're still at the higher end of the company's guidance. And around here was when I made my previous video for this series saying that I didn't believe that the stock would stay at this price for very long, and I actually ended up buying more shares at this time. If we jump over to the company's third quarter results, we can see that, as expected, revenues were down significantly because of the timing of project sales. But the company mentions this was expected and revenues were still at the end of the guidance range, which was what they had told us a couple weeks prior to this release. Gross margins for the quarter were very impressive and exceeded expectations at 61%. And in the end, the company was still profitable with net income of $2.1 million. The company's operations also accelerated during the quarter, with multiple joint ventures expanding into Europe, as well as the sale of a portfolio of UK operating projects. Jumping down a little bit, we can see the company's outlook for the market opportunity that they believe exists. The company estimates that by 2040, the energy market will allow for a share of 30% to be from renewables. And in Europe, they expect 50% of the energy market to come from renewables by the year 2040. So revenues were down 85% year over year for Sol at $9.7 million, which was at the high end of the guidance range between $10 and $8 million. $2.5 million of the $9.7 million revenues came from project development business sales, and $7.1 million came from the IPP business, where they generate the electricity and sell it to the grid, mainly in China. Gross margin was very impressive at 60.6% compared with 28.4% in the previous quarter of 2020, and gross margin was up 36% year over year. Despite struggling with the revenues due to the timing of sales, net income was only down $300,000 from the previous year. Going over to Sol's portfolio of projects, we could see that they've completed 800 megawatts worth of projects, and in operation they have 189 megawatts, with last stage pipeline being 732 megawatts. And then breaking the projects down to location, we can see that the US has the most overall, with all of it in last stage, followed by France and UK. I won't get into every single project here, but we can see that Sol has a very diverse portfolio spanning across the entire globe, and then the company's outlook is looking strong. They're expecting for revenues to be in the 23 to 25 million range, so over double what it was in the quarter, as the sales are timed better. But year over year, we can expect to see a decline due to the seasonality of solar projects, with a significant quarter over quarter decrease to gross margins within the range of 11 to 13%. Personal outlook for Sol is very positive. I think the company is doing great things year over year. They're in a better position, always improving their operations. And as mentioned in my previous video on the energy transition, I think there's going to be tons of investment coming into renewable energy generation. I think this company will see tremendous growth throughout the next decade, and that alone is why I am holding Sol. I'm also really impressed with the diversification that Sol has. They are in all the key areas that are going to see investment, as covered in my previous video. They have operations throughout Europe, in the United States, as well as in China. These areas are not only the parts of the world that have committed to significant investments in renewable and green energy, but they are also some of the world's largest markets, which is a great place to be as an energy company. Switching over to some recent events for ReneSola, the company was recently awarded a 38 megawatt solar project in Poland's electricity auction. The bid averaged approximately $70 per megawatt hour and is expected to be connected to the grid within the next 2 years. And then a more recent announcement from December 28th, we were informed that ReneSola is to sell 15.4 megawatts worth of solar projects in Romania through the company's project development business segment. This article shows another example of how Sol is in all the right places. The solar market has been growing rapidly in Romania thanks to initiatives from the government, and photovoltaics have accounted for a significant portion of the country's renewable energy generation capacity at 13% as of 2018. By 2030, Romania has committed to generate up to 30.5% of the nation's energy from renewable sources, with the country's energy market expected to increase at a rate of 10% within the next 5 years. That does it for this video, guys. I hope everyone learned a bit about Sol. As always, This is not investment advice. I'm not qualified to give investment advice. It's just my own personal opinion for why I'm holding this company in my portfolio. Please make sure that you are doing your own research and due diligence when looking at stocks to buy. If you haven't yet, please subscribe and drop a like, as this video took a while to make, so that would be much appreciated. And if you haven't yet, check us out on Twitter and Instagram. As mentioned, I linked that below. We are very active on there, posted multiple times per day. If you made it this far, thank you for watching, and stay safe, everyone.